All right, everybody, welcome back to the discount. I hope you're all having a wonderful week. What an absolute melt up we are having in Bitcoin, in crypto markets in general. You love to see this strength. Let's break down the charts with some common sense technical analysis. Let's see where we are since this massive move and what we can expect moving forward. So as you could tell, I drew a Fibonacci retracement from high to low and this downsloping trend line that we broke out of to the upside with fervor. So let's zoom in here a little bit and see where we are. Well, we know that our upside target for this move, if this move is going to continue, is that $35,000 level all the way up to 37.5. That coincides with the CME futures gap as well as a huge consolidation and breakdown area, if you remember that, from May in 2022 in that bear market. So zooming back in here. Now from a daily chart perspective, what can we expect moving forward? So we've been consolidating in this tight range since that massive move. And where are we from a larger trend perspective? Well, we have a low down here, we have a higher low, and we have another higher low. This is an uptrend. Don't forget that. So are we just going to be consolidating in this area for another push higher is the ultimate question. If we're going to stay in this range and make that move higher, that is the ultimate bullish scenario. And we're going to need some help from equities along the way, from the broader indices, in my honest opinion. So we are pulling back a little bit, as you can see here. And if I zoom in just a little bit, what are we really looking at? Well, we have a breakout area right here, which also coincides with the 236 retrace at about 27,800. If markets were to do some type of pullback, right, you have indices pulling back, Bitcoin's pulling back. Would it be normal for Bitcoin to stay in this uptrend, but pull back and retest this breakout area at the 236 retrace? Maybe even come back a little bit. Now, obviously, we don't want to see that for the most bullish scenario, but this still would mean that the uptrend is intact. We could see a bounce off this retracement level and resume uptrend, going ahead and tagging that all-important CME futures gap at 35,000, and then probably making our way back up to 37,000. So again, low, higher low, off to the races. Let's clean this up and let's get into lower time frames. All right, so here is a 10-minute chart of Bitcoin. What I'm looking at here, and as you can see, I already drew out my important trend lines that I'm watching, my important key levels that I'm watching. What I'd be looking for ultimately, if we were going to stay in the bullish scenario, right? Let's stay between 29,600, give or take, as the ultimate low, which also coincides with this deviation over here. Let's see how it holds up right here. If we're going to get down there, I want to see it hold, right? I want to see it bounce, and then give me a trigger to go long for more upside. Well, what about the bearish scenario, right? That scenario that I just told you about, which brings Bitcoin all the way down to that 236 level, right? That 27,800 or even lower. Well, perhaps there's going to be some type of short scalp, short trade, if you're not already short, for that scenario. And what do I mean by that? Okay, so if we get into this area here for that downside scenario, we make a sort of bearish pattern in the deviation, right? And it's going to coincide with this heavy consolidation area, the one area that was key support, then becomes resistance, and we see this break of this important trend line. That is going to be where I'm looking for that downside action all the way down, potentially to 27,500, give or take. Now, of course, there's going to be stops along the way. We have this area right here, coincides with 29,000. And of course, the fat round number of 28,000. So if you're going to play the short side, recommendation would be to take profit at those levels because it could rip up in the other direction as we are in an uptrend. So watch out for these key levels, guys, on Bitcoin, whether you're a short-term trader or more longer term. They should be great buying opportunities or swing trades, whichever you prefer. All right, now let's head over to Ethereum. So Ethereum has been lagging Bitcoin. We've been talking about this since last week. If I draw a simple retracement from high to low, well, where are we? We are at its 236 retrace, as well as this breakout area, this downsloping trend line, and within this larger channel. The most bullish scenario is Ethereum holds up in this sloping channel and breaks out to the upside, targeting 2,000 and then then 2100. If we're going to come back into this channel, that is not a great look for Ethereum. We have way too many hits on this upsloping trend line. And if Bitcoin is going to break down, you're going to see Ethereum come back into this wedge pattern and likely break it to the downside, down to 1431, 618 at 1360, and that should be the most downside for Ethereum. However, we'll have to keep an eye out when it gets down there, but ultimately you don't want to see Ethereum break this trend. I think right now Ethereum is showing that it's lagging and that it should break out for more upside if markets hold up. So what could you do with that information? Well, obviously this is not financial advice, but just a trade idea. You could play Ethereum against this channel and against this 1657 give or take area for upside. You could take it long here, you could take it long somewhere in here if it's going to dip, and that should give you a great risk reward for that $2,100 and that $2,000. And not only that, but it should come back down, maybe retest 2000. An ultimate upside target for this one play, this one trend play on Ethereum is that $2,500 level on Ethereum. So pretty common sense here, guys. It's all about risk reward. What risk are you willing to put on for the reward? That's why we are here. And right now I am smelling some great risk reward for Ethereum. However, you have to stay on your toes and keep risk in line, because if this scenario can play out, we need Bitcoin to hold up in the most bullish scenarios. So let's see what we get here, guys. That's pretty much it for the crypto market update, Bitcoin and Ethereum. Reminder that we do a macro weekly newsletter every Sunday. It is completely free. All you have to do is type in your email. Last week, we covered how the US dollar is depreciating, obviously, and how to protect your wealth. This next Sunday, we are going to be going over the most bullish scenario for Bitcoin, in our opinion, which is Wall Street creating ETFs and essentially pouring money into spot Bitcoin. What you're going to see out of this potentially impacts retirement accounts, and the market cap for Bitcoin should explode. So to get that weekly newsletter, guys, head on over, just type in your email. It's completely free, nothing to lose. We have a Telegram channel, again, completely free. We're posting trade ideas, whether it's the SPY, the S&P 500, Bitcoin. We post all of our latest real-time updates on Bitcoin, scalp opportunities in crypto, stock market trade ideas, Russell 2000, very well diversified channel. If you want this information in real time, come on over here. The link is in the description as well.